What is up? eBay is reporting earnings today. Right now, we're reacting to it live. Why are we reacting to it live? Because there are huge implications for GameStop. Okay, one of those implications is very simply GameStop owns 10% of eBay. So, as it relates to the stock reaction to eBay's earnings, that has a substantial bearing on GameStop's financials. It also matters because GameStop's pursuing an acquisition of eBay. So, the health of eBay's financials and the trajectory of eBay's financials matter as far as how desirable is this acquisition pursuit. It also matters as it relates to justifying the timing and severity of GameStop's actions, right? The sharper that eBay is potentially improving its financials, the more and more it makes sense that GameStop has to take more and more aggressive action sooner because this opportunity might not be on the table a year or two from now as eBay compounds their own business pursuits, right? It also, most interestingly, but also most speculatively, I suppose, it's going to be very interesting to hear on the earnings call, does GameStop get any specific mention as a 9.8% shareholder in the company? It's certainly possible they do, as well as how public they've been with their pursuits in conjunction with eBay's silence. This is really the first opportunity since GameStop has made their position official, exercised their calls for eBay to acknowledge them. And do we get any clues, whether it's a direct acknowledgement or reading between the lines, as it relates to the likelihood that eBay and GameStop are currently having conversations, the likelihood that they merge, that GameStop acquires eBay, as well as the speed at which an acquisition could take place? Those are all some things that we're going to be looking for in this video. Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. Before I get into all of this, want to say thank you to those who have subscribed to the channel. I spend $1 at GameStop for every new sub. I also want to say thanks to those who like, who comment, etc. Um, and those who join the channel as fans and friends. Right, we are on the sub count. We're pursuing 5555 because it's the 5555 staying alive sub club. Friends and fans, appreciate you guys. All the earnings go to Dearest Book. GME shares plenty of evergreen videos on the channel for your enjoyment. That said, if you're watching this after the fact, the live earnings call happens at 4:30 p.m. Central. Right now it's 3:15 p.m. Central. So if that's all you're interested in, skip to there. But the earnings will come out before then, which we will be able to digest together. I do want to talk about some of these implications and what we'll be looking for, as well as say what's up in the chat. So again, if you want to skip forward ahead, if you're watching this later on, feel free to. There's a lot of meaty content here in this video. Pause. Okay. How are we doing though, everybody? How are we doing? We've got 50 of you guys in here right now. Pilots, great to see you. Said you were refreshing, waiting for this. Ashton Kutcher scooped up 20 more shares of GME today at 18.99 and 50 more warrants. Congrats. Not gonna stop says you the man, brother. Love your content. Thank you. You are the man. I'm not gonna. I'm not. I'm loving your content. I'm loving your comment content. Battle Rat, great to see you. Bato Boy says, "Yeah, I was waiting for it." Frosted Leaf says, "Thanks for the content, much appreciated." Doji, what's up? Traxian, what's up? Yeah, I am going to be listening live to the earnings call. The earnings call does not start for another hour, but we're going to dive into the earnings before then. Before we dive into the earnings, which I don't believe yet are released. Oh, there we go. We just saw the 8K drop. So let's go ahead and dive into this without further ado. Let me know in the comments. Might not see every comment, so leave a super if you want to make sure that I see it. No pressure or expectation to, of course. Everyone is valued the same here at Budget for Life. But let's dive into the 8K. eBay, which by the way, the immediate release stock reaction is basically flat, right? They closed at 111. Right now they're at 110. Nothing too crazy as it relates to how the stock is reacting to these earnings. Revenue of 3.1 billion, which eBay's revenue is their seller fee, right? So the real revenue happening on the platform is 22.4 billion. Both of these up 15%. You would expect those to coincide. Earnings, they don't tell you whether those earnings are up or not. So I'm guessing earnings are not up meaningfully, but we will dive into that in the financials here as we scroll down. During Q2, they did another 310 million of share repurchases and paid 138 million in cash dividends. So far we'll dive into this further, but these highlights are very exciting to me as a GameStop side of the coin acquisition. 310 million share repurchases. What is GameStop's offer for eBay? GameStop's offer is on a per share basis, right? They have offered eBay dollars per share. So the more shares that eBay repurchases, those are shares that GameStop does not have to buy. They are removed from the float. So you're effectively decreasing the potential purchase price that GameStop would have to shell out, which is great. And you're also seeing very strong and even strengthening revenue on very strong and even strengthening total market revenue, right? Transaction revenue is basically off balance sheet for eBay, and on balance sheet or on income statement is the seller fee, their net revenue. They are still growing top line really impressively, and yet it seems that earnings potentially are not growing as much as you would expect, which is exactly what you want to see as it relates to GameStop's viability in their bid to take over eBay. You want to see expenses continue to be out of control because that is the linchpin and a lot of movement here now on eBay stock. You can't really see it that well on TradingView. So excuse me while I pull up a brokerage that I do not recommend using for your personal investments, but perhaps you might want to look at every now and then for the charts and hope, like me, that someone with a soul purchases the company outright. A little bit more stock reaction. Want you guys to see that. Regardless, being earnings dragging behind what they should be able to earn is Cohen's one of Cohen's largest selling points to eBay shareholders. So that is bullish as it relates to the chances that shareholders would vote yes if it came to a proxy vote. It's also bullish as it relates to the value that GameStop can add to the company because I think as a GameStop investor, we have all seen and are highly confident that when push comes to shove, if Cohen needs to cut expenses, he can find a way to cut expenses. So, speculatively, that's what we're thinking, but let's dive into it more thoroughly here. I wouldn't expect, by the way, before I keep going, I wouldn't expect GameStop to get a shout out on the 8K. I would think it might just get a shout out during the call. But sure enough, no GameStop or GME mentioned on this document, in case you were curious. Strong momentum. Hey, they're increasing outlook for top and bottom line. So that's good. That's encouraging. They finished purchasing Depop. eBay Live is growing on a percentage basis very sharply, 8 times year over year, an 8x growth on eBay Live commerce. That's uh, been a talking point for Cohen as it relates to something he can do and improve upon, but I don't know if that will be Cohen's best selling point without offering a little bit more clarity on how exactly you're going to do even better or why exactly an 8x year over year growth is not sufficient. Obviously, this is coming from a lagging position, almost an artificially low base, kind of similar to GameStop's financials as they've turned. A year ago in 2024, GameStop grew its net income by 1,859%. It's like, well, yeah, but that's because the year before they earned $6 million total. So that low of a base, you can do some ridiculous things and show an 18 or 19x return on net income year over year. That doesn't mean it's a sustainable growth rate. And sure enough, in 2025, we saw a sharp contraction. They only grew net income 219% last year. I mean, us GME investors have got to be just mortified. Regardless, the growth rate doesn't necessarily mean that the market share is where it should be, but apparently they used the World Cup and mobilize enthusiasts, right? Connecting with the sellers to try to continue to gain traction on eBay Live. But again, an eBay voter, you're not voting for GameStop to take over because GameStop can do so much on the live. To me, that's the weakest connection. I think the cost cutting and Cohen's leadership are substantially relevant, and the GME stores as intake for inventory and authentication services for the high dollar items. I think those are more attractive, as well as the in-game kind of digital marketplace selling those types of assets that eBay currently doesn't have a way to sell. Those are things that are much more compelling when you think about if I'm an eBay investor, do I want Cohen to own the company? More so than, hey, they can use stores as studios for a live. I'm like, yeah, but it's not like GameStop stores are like that good looking stores. You know what I mean? So, anyways, that is that. Expanding the authenticity guarantee. This is great. eBay acknowledges that the authenticity guarantee is super important, structurally very relevant to the growth of their business. That is great as a GameStop investor because that authentication service using stores and store employees to execute that shows it just provides a much faster growth ramp for eBay than what eBay would be able to create organically. So that value proposition remains intact, and this is a confirmation from eBay's leadership that they do agree that's an important piece of their business, as well as collectibles and trading cards. They view that as well as a substantial, important piece of their business, which is important if you're GME because you want GME investors and eBay investors to see that synergy for what it's worth. AI, motor parts in the UK, selling vehicles, going after some Facebook Marketplace market share there. Magical listing is really not worth a title. I have used their magical listing tool and it does not feel like magic. I will I will confirm. Tons of graded cards being sold on the platform, as well as Golden, which eBay owns. Oh, fun. And they were at the Met Gala. Great. Let's get into the financials. Here we go. Balance sheet. What's new, eBay? We've got total current assets up by $1 billion, a $500 million increase in cash, as well as 300 more in other assets and 300 million more in accounts receivable. But their total assets only up 500 million. So basically that cash is the difference between their assets December 2025 compared to now. Liabilities also up 500 million, despite long-term debt coming down by 800, but their current liabilities went up by 1.1 billion, so they have more short-term debt. In the past 6 months, what has eBay done to their balance sheet? They have added 500 million in debt, and as a result, their cash has also grown by that same 500 million, but it is not cash just cleared from their earnings, it is cash associated with the debt that they took on. More importantly, the 3 months ended compared to the prior 3 months ended. Gross profit in Q2 is higher than Q2 of last year. So you are seeing some of that revenue at least affect profitability, which means margins remain very strong. Obviously, most of the expenses are outsourced to eBay sellers when you think about sourcing the inventory, purchasing the inventory, shipping the inventory, fulfillment on the back end if there are any returns, all of that, and even paying the taxable income on their portion of their payout, all of that and the employment expenses, all that's outsourced, right? You contract out all of the labor on the fulfillment and inventory side, so you don't have much cost left for you as a business. Gross profit up by about $300 million, or on a 6 month basis, up about $700 million. Either way, almost like a 15 to 20% increase in profit. Now, that's before operating expenses. Cohen has not talked about, in all of his cost cutting talk about eBay, he has not talked about the cost of net revenue for eBay. Cohen has specifically talked about the operating expenses. That's what he has illustrated, saying, hey, everything on the marketing front, product and development, general and administrative, that is where he is going to slash, over $1 billion worth of operating expenses on an annualized basis. And those operating expenses have grown, and their interest expense has also grown just slightly. It's basically the same. So their actual net income year over year, you're looking at almost a $200 million improvement in net income. And none of that came from Q1. That's basically all from Q2. So if the stock is reacting positively, which, it's pretty modest reaction, but a $200 million improvement in net income on a $364 million base is really strong. Really strong. Which to me, this is this is important because in my comments, talking about GameStop's early dilution, the bombshell convertibles, which we'll dive into that here as well. We'll dive into that a little bit so that you guys can kind of see how I'm tracking that. But some of you guys have thought, man, why now? Why would GameStop convert some of their convertibles early? Why not just run it forward another year or two let the stock do what you know it's going to do on the GME side, let it appreciate, and then just do a conversion on the agreed upon time frame that you already had, on the agreed upon prices that you already had, right? Why do it early? Why not wait and then buy eBay? Well, what are the main factors as to GameStop's margins increasing and revenue and sales per store increasing? The largest factor is Pokemon. Guess who sells a lot more Pokemon than GameStop does? eBay. So if the things that are winning GameStop sales that are transforming GameStop's company are also simultaneously at work in eBay's company, then if GameStop right now happens to have a balance sheet advantage and a timing advantage and the advantage of surprise even on eBay, it's not a guarantee at all that the same deal is there for you a year or two or three from now. It makes sense to say, hey, this might be our opportunity. Right? Look at this year over year income growth. If eBay keeps selling Pokemon and if they keep growing their live platform, then they're never going to have to cut all these operating expenses. They can keep running the company like a country club if Pokemon is the wind in the sails that puts cash in their pocket. Now, if GameStop owns eBay, they'll make it that much more valuable. But again, if you're a GameStop investor, I think it makes sense that GameStop is aggressive right now because I think the same win in GameStop sales is also in eBay sales. And the more that Ryan Cohen communicates of what his plan is and what eBay can do to create even more value, there's nothing inherently stopping eBay from taking some of that advice. So to me, it makes sense that, hey, strike while the iron's hot. This might be your opportunity. Also, we know that in GameStop's Q2, they will record their gain as it relates to eBay's stock closing at the end of GameStop's Q2, aka last Friday, and that there is anywhere from a $300 to $500 million gain, depending on how much you assume is already baked into the 268 that they realized in Q1. There's a couple $100 million of gains that they're going to recognize in Q2. However, in Q3 and beyond, it is GameStop's opportunity to choose instead equity accounting instead of fair value accounting. How would that equity accounting be calculated for GameStop's Q3? Well, GameStop's Q3, the equity accounting on their eBay position would be based on eBay's Q2 because eBay's Q2 was released today, August 5th, which just so happens to be during GameStop's Q3. How does this work? Basically, you take 10% of 550, 55 million bucks, or call it 53, whatever, 9.8% that GameStop can just put in other income in Q3, right? 55.5 or sorry, 550 times 9.8, well, maybe times 0.098, 54 million bucks of GameStop income. This is GameStop net income on their real financials that they just get to pull because they own eBay. So we'll see where eBay's stock is at the end of GameStop's Q3, which would be at the end of October, if eBay's not already acquired by then, which I think it's very possible they are. But if they're not, based on whatever stock price they're at, GameStop can basically say, well, are our gains going to be even higher than 54 million? If so, then we'll go ahead and log the gains and still do fair value accounting for one more quarter. If not, then we will just take our share of eBay's operating income and treat it as equity accounting. And that close price was 114 a share. So how much with GameStop's share position, where do they need to close to make up $53.9 million dollars? GameStop owns, I think, about 44 million shares. So you would need to see basically if eBay's at 116 or higher by the end of October, they probably go ahead and log the gain from the unrealized gain from the share appreciation. But if eBay's any lower than 116, GameStop doesn't have to realize any losses. They can just write in that 54 million bucks right there. Boom. Call it a day. Boom. You gotta like that. You gotta like that. Are we tracking so far today? What is up, my friends? Great to see you guys. Alpha David, Spoon, Bateau Boy, Don Wego, Peter, Zeri, Glen Rose, Adam, Jaspo, username redacted, Savvy Snail, Cassie, Wisco. Thanks for being here, guys. We're learning a thing or two about eBay and adding in some implications for GameStop. Here is where the webcast will happen. This will be the potentially juiciest part of the video, but really the least important as it relates to GameStop. Much more importantly is what's the actual state of affairs within eBay. And so far, okay. Oh, thanks, Alpha. He said try to send some jewels your way. Adam West says, hope you're having a good day. Sedgy says, what's the word? Marvin says, hey, what's up, guys? What's up? So far, the balance sheet is unchanged, and eBay's balance sheet is not really like the sexiest balance sheet. It's not, it's not like, it's nothing to be too excited about. GameStop is not buying eBay to improve GameStop's balance sheet. GameStop's balance sheet, much sexier. I mean, just just way much higher curb appeal. If you're a balance sheet, if balance sheet is your type, you you definitely, I mean, GameStop is right up your alley. Okay, and you would never be seen in the strip club that is eBay's balance sheet. Okay, you're going for the real one. But eBay does have a business that GameStop can't replicate meaningfully, which is its peer-to-peer online marketplace, right? The marketplace itself is what eBay provides. It's not the seller fee, it's not the websites, it's not the technology, it's literally just the fact that buyers and sellers are both there. So they benefit from the marketplace effect. And that marketplace, despite a gluttony of expenses, makes a lot of money. And at least year over year, at least in Q2, made a lot more money. Let me get you the actual percentage terms here. 550 minus 364, a $186 million improvement. That's a 50% almost improvement. No, 51%. That's a 51% improvement in net income year over year. So I'm just saying if this is the one that got away if your type, which seems to be Ryan Cohen's type at this point, is financial upside, is deep level embedded sustainability, right? It, Cohen talks about how eBay's management team, he calls them the entrenched management team. Well, eBay is also an entrenched business in society that's purely an e-commerce associated brand. GameStop is not entrenched in the same way. They're becoming that way. They're getting back to that, but they found themselves in a tough sector to thrive, which is brick and mortar retail. That is not a deeply entrenched portion of society in this day and age, whereas eBay really is. So if your type is I want bona fide sustainability of income. I want an easy way to improve income through cost cutting, right? I want that. I want the glut in the SG&A, in the expenses, so that I can cut the glut. If there's no glut, how can I cut the glut? So I need the glut. eBay has it. You can cut this glut far more efficiently than you cutted GameStop's, than you cut GameStop's. Cutted, probably not a word. Because eBay doesn't have stores, right? To cut all of GameStop's expenses, you had to close thousands and thousands of stores, which absolutely atrociously impacted GameStop's top line. Almost a 50%, more like a 40% reduction in top line revenue. All the while, net income's growing, but no one cared until revenue was also growing. With eBay, you can increase profitability without it really affecting revenue because of how entrenched it is in society. It's such an entrenched, bona fide, sustainable, durable business. And its operating expenses largely are not directly tied to revenue generation. The marketing expenses probably are, but even that is only one third of your total operating expenses. And not all of those marketing dollars need to be just erased. Some of them can be reallocated to more efficient channels. All that to say, if your type is upside, high upside, easy increase to net income, very durable revenue, then you'd be drooling over eBay's financials and you'd be skeptical over GameStop's. Because as great as GameStop's balance sheet is, and as much as they've leveraged that balance sheet to increase their net income, there is a bit more skepticism about the position that they're playing from. It's not personal. For some people, it is personal, right? The GameStop hate. But revenue's genuinely been declining for years and years. So, okay, it finally inverted, but is that inversion sustainable? Is GameStop going to resurrect brick and mortar retail for all of America? That's a really tall task, you know? So if your type is balance sheet, you love GameStop. If your type is upside combined with durable revenue, then you like eBay. If your type is Ryan Cohen, you like both. Simple. Simple. Cash flow statement. Let's see if anything's interesting here. Nothing stands out to me on the operating cash flows, investing wise, purchasing some property, some investments maturing, some stock buybacks, stock awards, dividends, paid off some debt. Look at them go. They paid off some notes. Your current debt, you borrowed short-term debt to pay off long-term debt, so I'm not sure if that makes that much sense, unless you think there's going to be a short-term change, right? Revenues growing and increasing in speed in their growth, right? Last year they grew at 6 and 9%. This year growing at 15, and we'll see what Q3 does, or 15 and 19% in the prior quarters. Active buyers still flat. So the revenue growth is not coming from a user base growth. That's great. Again, from a GME perspective, you don't want to see eBay just absolutely destroy everything crazily across the board and simultaneously kind of spit in the face at Cohen's suggestions. Like if if eBay if their comments that we read at the top do not line up with what Cohen sees as important value drivers for the company, that and simultaneously they're being proven right, that would be concerning. But some of the things they're being proven right on are things that Cohen has been highlighting that are important that they need to continue to capitalize on. So that is validating in a sense, but then there are also areas that just leave you kind of wanting. One of them being the active buyer base. It's not it's not meaningfully changed at all. If they had stores, if eBay all of a sudden overnight had 1,500 US stores, do you think that would bring more buyers and sellers to the marketplace? Of course it would. Of course it would. Another thing that leaves you wanting more is their operating expenses. So yeah, they grew net income. That's great. And again, as a 10% owner beneficially of eBay, you want their income to grow, but they don't show any signs of slowing down the glut. Look, operating expenses are up also like 20% year over year. 3,302 minus 2,778. It's $524 million increase to operating expenses, which is a 19% growth year over year. And cost of revenue is increasing, right? So thankfully, your net revenues increased more in dollar terms than your cost. So your gross profit improved a little bit, like your margin percentage improved enough to mask the operating expenses glut. But if you're an eBay shareholder and you're listening to Ryan Cohen say, "Hey, I can cut half of this on a quarterly basis," right? You're at, 1.5 billion per quarter in operating expenses. We could make that easily 1 billion a quarter. That's what he said is his commitment is a $2 billion drop annually. Well, $2 billion times whatever PE that eBay's getting, which right now today they're being given a 24 PE. $2 billion times 24 is $48 billion. Well, shoot, this is a $50 billion company, and you're telling me that without even growing top line, you can literally double its value? It's kind of insane, right? Like, you want to see that the business overall is intact and healthy. The reasons why GameStop would want eBay are still in play. And the window that GameStop can't even potentially pursue eBay, you want to see that that window could be closing because it helps you stomach some of the actions that GameStop is taking. Simultaneously, you still want to see that it's in eBay's best interest for this deal to happen. Also, that you're not stealing eBay from eBay shareholders, but that actually this creates a genuine win-win. And to me, I see all those signs here in these earnings. What do you guys think? General thoughts on eBay's earnings, and then we can continue to shift the conversation over towards their call and what we might see there, as well as just one kind of calculation I want to show you guys on my spreadsheet that I added in. Nothing crazy different as far as what they're guiding. Reconciliation. Great. And that is the 10K. That is the 10K. Great. Are we here? Am I coming through? Can y'all even hear me? It's been quiet on the chat for a little bit, and I'm a little nervous, and I've just been talking to myself, which would be okay because it's just still information that I'm wanting to talk about. Oh, this is a fine day, says yep. Great, great. Yes, Colero says eBay has been increasing their advertising. It's true. They have been increasing their advertising. So, not a surprise that they are growing their revenue. Oh, this is a fine day, says I think everyone is working. That could be, sometimes I forget that everyone's job is not to analyze companies. It's probably for the best. We don't want everyone to have that job necessarily. Great, great, Ashton Kutcher. So, one interesting thought here, eBay earnings prediction. Olympia is here. Great to see you. Cheers. Will Pokemon and GameStop be a topic? This article is not that interesting in and of itself. Oh, you locked me out? I read this earlier without a problem. Well, I'll just tell you what the article said, and you can log in. Kalshi apparently is a predictions market, and in great, Patrick. Kalshi was there's betting odds on what eBay will or won't say, like literally verbatim what they might say in their earnings call. And some words are at like 97%, like income and just random stuff like that. Pokemon was at, I think, 73% for a reference. Sneakers was at a similar 70 something percent. Bullion, which is gold, was at 60%. GameStop. I know some of you guys think, why are you even doing an eBay earnings call live, right? Isn't this all pie in the sky? There's no way that eBay is going to say anything about GameStop on the earnings call, right? There's no way that they would. I would have guessed. What would y'all have guessed? The betting odds on Kalshi as of a couple hours ago that GameStop would get a shout, like that would be mentioned by name. GameStop mentioned by name on eBay's Q2 earnings call. Keep in mind, GameStop has nothing to do with eBay's Q2 earnings, right? There literally zero of this is related to GameStop. During the quarter, GameStop started trying to, acquisition bid. They own shares, but does Vanguard get a shout? Right? There's to change the conversation from second quarter earnings to then talk about GameStop during the second quarter earnings call. I would think like 5%. Personally, that's what I would have expected. Now, I was still going to listen to the earnings call no matter what, because what else am I going to do? It's Wednesday, August 5th, and the pricing window doesn't finish until September 23rd, So let's see what's going to happen during this pricing window. It was at 26%. 26% chance on that betting market. By the way, the betting market's odds that GameStop acquires eBay was are still around 13% that it happens this calendar year. Betting markets give a 13% chance that GameStop will actually be able to acquire eBay, but a 26% chance that GameStop by name gets mentioned in the earnings call. It doesn't mean that we're going to see any tea leaves, but personally, I think it's very possible that eBay purchases eBay this calendar year. So for it to be twice as likely, according to betting markets, that GameStop gets discussed, to me, again, worth listening to the call. Worth listening to the call, in my opinion. Now, let's talk about real quick the VWAP, volume weighted average price of the common stock over 35 consecutive trading days. That is the reference point by which GameStop will exchange their shares for the 1.4 billion in cash that they already possess for the rights to keep that cash. I want to talk about what is the dilutive impact of this beyond what was originally communicated. Because some people, again, in the comments, just so angry, right? Anytime Ryan Cohen does anything, it's like, he is so horrible. It's like, can you just say you're upset that the stock is down? Okay, this isn't really about Ryan Cohen. Okay. And then when the stock's up, it's like, oh yeah, this is so good. It's like, actually, this has nothing to do with the stock. So many of y'all's emotions are really strongly tied to whether the stock is green or red. And I'm just saying, 5.5 years into this journey, I would encourage everyone to pursue emotional resilience as it relates to succumbing yourself to the ebbs and flows of near-term price movements. That said, I was perhaps a bit too sassy at times in the comments because there is a dilutive effect to this early conversion beyond the original conversion. And I am illustrating that here in the projections tab right here. Right here. So it's volume weighted. It's not just what was the average price divided by 35 days. These blocks are trading weeks. September 19th, I believe, if I can count, is the 35th day. And September 23rd is when they will actually issue or formally convert those shares. It's not just divided by 35, it's weighted by the volume. And we saw a huge volume on Monday, August 3rd, which has a huge impact on ultimately the VWAP. Today, if we were to say, hey, what was GameStop's trading volume August 5th? About 8.3, which if I fact check that on Robbing the Hood, sure enough, 8.3 in volume. The average price today opened right around 1905, dipped down to 19, got as high as 1932 middle of the day and closed back at like 1910. So, according to my rough eyeball, like I'd say the average price probably somewhere in that 1910 range, which is a 5% improvement or a 5 cent improvement from the day before and brings our VWAP up to 1902. Let's go. Of course, there is some pricing floor that we don't know. There is some floor at which the conversion will not be below. Some of y'all have enjoyed speculating what if that floor is meaningfully higher than 19 or 20 or 22. It's very possible, but I think it will probably, the actual conversion price will probably be something close to the VWAP. I don't think the floor conversion price will end up coming into play necessarily, but that's just me. Adam West says, "Can I ask what it is called again as they are trying to find average price range for GameStop during this time period?" I'm not sure if I have failed to answer that or if I'm late to getting to that question, Adam West. But this is the price per share that they are going to use to pay $1.4 billion dollars. But they're not actually paying the dollars, they're paying the share equivalent based on this weighted by volume share price. So if we had a day, just to illustrate, like if tomorrow GameStop spiked to $40 a share on 1.5 million volume, the VWAP over this period would only be at 1953 because the volume is so low. So if you're just swing trading shares, it's pumped that you hit 40, but unless you're going up with volume, it's not going to swing the VWAP that dramatically. And every day that this goes on, this VWAP becomes that much more heavily weighted, that much more concentrated if you're just stacking days around 19 or 20 a share. So, what happens to finish this question, Adam West? Because that's the point of what I'm trying to communicate here right now. Let's say the VWAP it ends today, it's 1902. That means that 73.5 million shares are created and issued to these bondholders. What happens to GameStop's balance sheet? Cash stays exactly the same. Their liabilities goes down by 1.4 billion. You won't see those happen until Q3 because they're doing this during Q3. But the other thing that happens is 73 million shares get created. So when you're looking at the float, you add 73 million if it's 1902. Now, again, I've been a little bit too sassy because I've said, hey, why are you surprised? This dilution was announced over a year ago, which is true. The convertibles we knew would approximately cause 145 million shares to be created, but that was based on 28 and 29 conversion prices for the shares. So, what is the real dilution that we're talking about with this early exchange? Well, this 1.4 billion specifically, 400 million of that is coming from the 2030 notes, and 1 billion of that is coming from the 2032 notes. Oh my goodness. We've got Unc Alert gifts from Option Trader. Thank you. Thank you for those gifts. Those notes, according to the bond tab, right, the 2030 notes had a 29.85 conversion price. The 2032 notes had a 28.91 conversion price. So what's the difference? Well, if you take those conversion prices, that 1.4 billion, right, 400 from the 2030, 1 billion from the 2032 was going to create 48 million shares. We still have the other 2.8 billion. We'll see what happens there. 48 billion shares were going to get created, but a VWAP of 1902, that pricing means that 73, almost 74 million shares are going to get created. So what is the new dilution that we're talking about? We are talking about 25 million additional shares of dilution. We'll see. There's still a lot of days left, and there are a lot of things that can happen, but I don't think it's, I think the price will probably stay low through most of August. Maybe it starts to tick up on my birthday, August 24th. We'll go ahead and bold it because it's my birthday. Let's go. Will I live stream on my birthday just for fun to celebrate with you guys? Maybe. Maybe. I don't know. It's a Monday. It's not, I mean, it'd be great if it was Tuesday morning, but we'll take a Monday. Thanks, guys. SC, Adam. Thanks, y'all. But at that point, right, we'll see somewhere in here is GameStop's Q2 earnings. I think once you hit September, not only are you on the back leg of this 35-day window, right, two-thirds of the trading days are already in the books. So if you're a convertible holder, it's not that big a deal if the price starts to appreciate a little bit, especially if you can suppress volume during that appreciation. And as you get closer and closer, right, you're going to see people that are kind of flipping long, knowing that there's not very many days left of that price suppression. So if you think it's about to rip, you might want to get in soon. So you might see it start ticking up and up in that window, but not necessarily so meaningfully that it changes drastically this kind of VWAP pricing. So, anyways, let's just say it's 1902. Ashton Kutcher says they're going to announce the tender offer on your B-Day. I'm manifesting it. Thanks. Great Babe's birthday is on Sunday. Thanks, guys. Oh, and someone says Virgos are the devil. Am I a Virgo? Am I a Virgo? August? I didn't even know that. I definitely didn't know that I'm the devil. Tell you what. Tell you what, Short Fridays. I'm glad you're here because if it wasn't for you, I would have never known that I was the devil. So, the man of the people. 25.6 million shares. August 10th is Leo, but I'm August 24th. Anyways, as a percentage of the current float, you're talking about a 5.7% dilution. That's if you're thinking about right now, GameStop has 448.7 million shares, which is really not like a fair way to think about it because we knew, right, these convertibles and these warrants, we already knew. This is not new dilution. This was announced many moons ago. So if you just take it based on the fully diluted float, you're talking about a 3.9% additional dilution. 3.9%. Is that tough to stomach? I guess. But if this move is quintessential in your acquisition attempt of eBay, what is eBay compared to your stock? Well, GameStop right now is an $8.5 billion company. Let's just call it 10. eBay's 50. eBay's 50. Your company's 10. So you're telling me that we should get super pissed off about 4% dilution on a $10 billion company. That's what you're telling me? Are you sure? Is that your final answer? Is that your final answer? Because we are looking to acquire a company that is worth 400% of your $10 billion company. You're telling me I should get super bent out of shape about a 4% dilution, that I should try to protect that 4% and risk letting go of a 400% opportunity. If that's your final answer, I mean, I respect it. And again, it just means that you have a type. It just means you have a type. And your type is not densely bona fide sustainable revenue. Your type is not high upside. Your type is not glut that we can cut to increase net income. And your type is not Ryan Cohen. Your type, if you want to protect this 4% and let eBay be the one that got away, in spite of GameStop's communications and Cohen's communications over this past year, your type is strictly balance sheet. I mean, that's it. Your type is strictly balance sheet, which a balance sheet, you know, if you were a business, okay, and we were going to try to summarize your business activities, you know the best way we could do that? If you had to pick a financial statement, which financial statement would you pick to describe the state of affairs with a business? I'll tell you, it's the income statement. Okay. You know who has a great balance sheet? I don't know, a a million 5-year-olds in the world that have $100 in the bank and don't do anything, right? Having assets that are greater than your liabilities is not descriptive of your ability to generate wealth. Generating wealth means producing and serving, right? Doing things and making things that help people, that people want, and they want it so much that they will pay you for it, and the money that you make for it will be substantially higher than the cost it bears on you to fulfill those commitments to the people that you're serving. All of that is income statement. Okay, how much money you have relative to how much you owe is not descriptive of your business acumen. It's just descriptive of your level of risk tolerance, which is important, okay? I like a good balance sheet. I do. I mean, who wouldn't like a good balance sheet? But it's not the end all be all if you want to own a business that appreciates in value. If you want to make money, a good balance sheet does not help you make money. A good balance sheet helps you not lose your money, right? Which is a good goal, right? We want that. It's good. But I'm just saying, if you had to pick one financial statement to fall in love with, as a financial advisor, I would say you should probably fall in love with the income statement, not the balance sheet, if you had to have a type. But if your type's Ryan Cohen, ding, 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 then you like both. Just like that. It's pretty great. So let me finish this conversation here. Okay, 4% dilution for the opportunity to purchase 400% of the value. Geez, am I supposed to be so upset? No, I'm not. If your type is balance sheet to the grave and that's all you care about, then yes, you should be upset. Actually, no, then you still shouldn't be upset because literally your balance sheet gets better. Okay, so if your type is not balance sheet and your type is not income statement, you don't care about any of the fundamentals. All you care about is a short squeeze. In my opinion, you still should not be upset because again, 4% added to the float for the opportunity to increase the value of your enterprise by 400%. Like these 25 million shares are not going to be what gets in you were about to squeeze and now you're not because these 25 million shares. I'll tell you what could impact a squeeze though is you weren't about to squeeze, but now you are because you just acquired a company that's worth 5 times as much as your company. You know what I mean? Like it's just absolutely wild. Anyways, finally, okay, there is the 2.5 billion dollar, sorry, 2.5 billion share authorization. The 2.5 billion share authorization. What's 25 million shares as a percentage of the total authorized float? It's 1%. 1% of the float in additional dilution. That's it. 1%. Bato Boy said, just increase my position with 4%. Easy. Easy. There you go. If you're so pissed about it, just increase your position by 4% and you have the net same equity exposure. And you still have the upside, by the way, of acquiring a company that's worth 5 times as much as your company. So there you go. This is a fine day. Cheers. I'll see you later. August is a fun month. September will be even more fun. When we think about the catalysts, see Adam. We now have 1.4 billion in convertibles coming off the books as another catalyst. What do I expect the impact to be? Well, you're looking at 525 million shares. Why 525? Well, now you guys know it's 74 million shares on top of the 448 you already have. Super simple. 1.4 billion shares, or sorry, 1.4 billion in net cash is added to your balance sheet. You don't get any new cash, but you do increase your net cash. Increasing net cash by reducing liabilities by about how much? By about $2.50 per share. So again, am I supposed to be so upset that after this news broke that GameStop went down by $2.50 a share? Right, we were at 21.70. Now we close at about 19.20. Literally $2.50 a share that's gone down during the pricing window. And after the pricing window, should go right back up. It's basically the convertibles making sure that they're not getting double, that their money's not getting double counted against them. Say, hey, if this company didn't have 1.4 billion in net equity, then it would only be worth, it would be worth in our eyes $2.50 a share less. If you didn't have the 1.4 billion in net equity, that equates to $2.50 of equity, of enterprise value. So I'm going to do everything I can to get your stock to reflect that in the pricing that we are paid out so that after we're paid out those shares, you can get that $2.50 right back because that 1.4 billion is added to net cash. It's not any new cash, but it's debt that comes off the books. So that in itself becomes its own catalyst, all lining up for September, it seems. Another catalyst tab update I wanted to give before we get into this earnings call, now less than 10 minutes away. Let's go, actually. Is it already starting? Oh, no, no, it is not. No, it is not. It is some crazy music. Before we get into this, one other update on the Catalyst tab. The Japan carry trade, right? I thought very exciting stuff, very bullish. Trading up at 163.8. What's Japan going to do? Well, in August, or at least in late July, basically nothing. We see a can kick. The US comes in, and the US buys yen to help Japan, aka to help itself by preventing Japan from having to sell its USD, which Japan is threatening to do. So That catalyst is still there. I marked it as orange. I don't really know why. I don't have a very clear legend yet for what colors mean, but we see a can kick, but it's not removed because it's still threatening. It's still climbing on its way back up. And so perhaps by September, it's back over 160 and we see the whole conversation begin yet again. So we see another catalyst there. Also on the technicals explosion piece, we did, we'll see, I haven't updated this in a few hours, about 1 million shares come off, as well as about, 0.03% of a fee increase. Nothing too crazy there. Obviously, we saw a huge volume event on Monday on GME, which worked to the downside. And XRT, someone tells me in the chat, is now off of Reg Show. Could it be XRT gone? I thought they would have used the volume event from Monday to get it off Reg Show, but it was still there on Monday. And it was still there yesterday, but maybe that's just the process for getting the clearing to actually clear. Does that mean that GameStop's about to launch in the next day or two? I think probably not. I think it's the volume afforded by this opportunity was enough for XRT to re-regulate itself. So the technicals explosion also on the IV side, right? On Friday, I talked about we're as low as 24 on IV. We were at 24, which is the 0 percentile rank. We then spiked to above 50. Now we are on our way back down to 35, which is low, but not like severely low. And the volume today, right? We spiked to 41.6. Now we're back to 8.3. We're climbing our way back down, but it's not necessarily severely low. So we saw a lot of things lining up. GameStop lows, historically low IV and low volume. XRT was on Reg Show. These to us were kind of indicating, hey, a big volumetric event is potentially coming. I said maybe 75% odds. Well, it did come. It just was in the wrong direction. Wha-bam, 15% drop, just like that. Volume, boom, spikes. IV, boom, spikes. XRT, boom, cleared off Reg Show. But price didn't go the direction we wanted. In the near term, this kind of like probably puts this in the similar category to the Japan carry trade, which is all these things are still trending back that direction, right? IV is still trending back down low after this event. We'll see what happens with XRT. Maybe that takes longer to rewind up, but volume's going back low, IV's going back low, and generally speaking, the stock is so low that you figure when you like you figure that a run up from this level is still generally imminent when you think about the reality of the current stock price. But this is a generally suppressing event, I would assume, for most of August, if not September as well. And so I would kind of kick this can to, hey, maybe in September we see some of these events. We could, some people might say, oh, XRT was just cleared today. So maybe that means we're about to see a run like in the coming days. I think that's possible. I'd be excited if that were the case. But I personally would lean more like 85% chance that it's off Reg Show because of the run that we just saw, but the run went in the wrong direction. That's kind of my take on it. Adam, Adam got banned from Superstonk. Well, maybe you're not banned, but you can't post budget for life stuff anymore. Sorry to hear it, Adam. My apologies. Not banned. Confirmed, not banned. Just not budget for life. Budget for life is effectively banned from Superstonk. What's up with that, mods? Hey, mods of Superstonk, if you're out there, what's up with that? What do you have against fundamental analysis of GameStop? I mean, geez. Like, honestly, what is up with that, mods? Is this a cartel? Is this a GameStop information cartel? Do I need to pay mods under the table for people to be willing to freely discuss these GameStop discussions? Because if that's the case, I'm not bowing down to you, mods. I'm not giving you any money under the table because that's weird. All right, that's all I have to say about it, really. Adam said they cited my paid membership link. You told them it all goes to DRS Book GME shares, right? I mean, if I didn't have a paid membership, I would still be getting ad revenue from the videos. So I don't even understand that. All right, let me go ahead and turn this on quietly in the background because we might be coming soon. Adam says, I think they were looking for a reason. Yeah, quite possible. The volume should be very low right now. Is the volume low for you guys on this video? Yeah? Click go live, huh? Yeah. There you go. Oh, volume is perfect. But when I talk, can you hear me, or am I like totally trolling over the volume right now? Okay, how do I kind of summarize August 3rd, massive volumetric event to the downside, XRT cleared, and I spike. Hand is handshake. I don't know. Something like that. Okay, I will raise the volume once it's a little bit.
Good day, everyone.
Oh, there we go. Here we go. Here we go.
Kate and I will be your conference operator today. At this time, I would like to welcome you to the eBay second quarter 2026 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, and if you have joined via the webinar, please use the raise hand icon, which can be found at the bottom of your webinar application. At this time, I would like to turn the call over to John Egbert, Vice President of Investor Relations.
Good afternoon. Thank you all for joining us for eBay's second quarter 2026 earnings conference call. Joining me today on the call are Jamie Iannone, our Chief Executive Officer, and Peggy Alford, our Chief Financial Officer. We're providing a slide presentation to accompany our commentary during the call, which is available through the Investor Relations section of the eBay website at investors.ebayinc.com. Before we begin, I'll remind you that during this conference call, we will discuss certain non-GAAP measures related to our performance. You can find the reconciliation of these measures to the nearest comparable GAAP measures in our accompanying slide presentation. Additionally, all growth rates noted in our prepared remarks will reflect organic, FX-neutral, year-over-year comparisons, and all earnings per share amounts reflect earnings per diluted share unless indicated otherwise. Additionally, all year-over-year growth rates versus 2025 are based on recast financials reflecting our adoption of the new internally developed software accounting guidance in 2026. During this conference call, management will make forward-looking statements, including, without limitation, statements regarding our future performance and expected financial results. These forward-looking statements involve known and unknown risks and uncertainties. Our actual results may differ materially from our forecasts for a variety of reasons. You can find more information about risks, uncertainties, and other factors that could affect our operating results in our most recent periodic reports on Form 10-K, Form 10-Q, and our earnings release from earlier today. You should not rely on any forward-looking statements. All information in this presentation is as of August 5th, 2026. We do not intend and undertake no duty to update this information. With that, I'll turn the call over to Jamie.
Thanks, John. Good afternoon, and thank you all for joining us today. eBay delivered another strong quarter in Q2, with results that exceeded consensus expectations and the high ends of our guidance ranges across all key financial metrics. Gross merchandise volume grew 14% year over year to more than $22 billion. Revenue also grew 14% to over $3 billion. Our top-line outperformance gave us the flexibility to increase investment behind several strategic priorities while still driving 16% growth in non-GAAP operating income and 17% growth in non-GAAP earnings per share. These results reflect the broad-based momentum across our marketplace, including continued outperformance in the U.S. and improving trends across our international markets. Importantly, our growth continues to be driven by our key strategic priorities, including focus categories, our consumer-to-consumer or C2C business, and re-commerce, which we define as sales of pre-owned and refurbished items. Together, these strategic priorities made up more than 70% of total GMV in Q2, with each growing more than 20%, both individually and in aggregate. This momentum was further supported by emerging growth vectors and platform capabilities, including eBay Live, vehicles, and shipping. Focus categories remain a significant engine of growth for eBay, reflecting the cumulative impact of our investments in trust, innovation, and full funnel marketing. Focus category GMV grew 26% in Q2 and eclipsed 40% of total GMV for the first time. The strength in focus categories was broad-based, with collectibles, motors, fashion, and refurbished all contributing to growth. Collectibles GMV growth continued to be led by strength in trading cards, where we saw sustained momentum across all of the major sports and collectible card game genres, including notable strength in basketball cards through the NBA Finals and accelerating demand for soccer cards around the World Cup. We continue to strengthen our value proposition in trading cards, combining our unmatched inventory breadth with industry-leading trust and increasingly intuitive experiences for buyers and sellers. In Q2, we launched Authenticity Guarantee for trading cards in the UK, marking the first expansion of AG in this category outside of North America. In addition, our AI-powered card scanning experience exited beta and now has surpassed 80 million cumulative scans, making it easier for collectors to identify cards, understand pricing, and list or shop with confidence. We also recently enhanced trading card listings with richer market data on the view item page, including card ladder indexes that track values across specific players, characters, sports, and genres over time. Our collectibles momentum is also extending to a number of subcategories as we continue to see strong growth in coins, toys, and sports memorabilia. In Q2, we introduced new condition grading standards for collectible coins to improve trust and discovery. Gold and silver bullion remained a positive contributor to GMV in Q2, although they were much more modest drivers than the prior 2 quarters, as expected. Our off-platform collectibles marketplaces also continued to perform well. TCG Player saw strength across Pokemon, One Piece, and Magic the Gathering, while its latest Roka sorting devices are now helping thousands more hobby shops and high-volume sellers ingest and organize their customers' inventory. The Golden Marketplace had another record quarter, with several landmark sales across sports cards and memorabilia, including the most valuable solo Michael Jordan card ever sold, and an all-time public record for a hockey jersey with the sale of Wayne Gretzky's final Edmonton Oilers jersey. eBay Motors was another meaningful contributor in Q2, contributing nearly 2 points of GMV growth. Our motors parts and accessories business continues to benefit from eBay's unmatched breadth and depth of inventory as we expand our selection of new, used, and recycled parts across our major markets. In Q2, we launched easy and free returns in the UK, which strengthens buyer confidence and improves conversion as buyers shop for auto parts on eBay. In Canada, we launched Guaranteed Fit, extending fitment protection to a fifth eBay market. We also brought automated fitment capabilities to Canadian sellers, which augments their listing with vehicle compatibility data so buyers can discover a broader selection of relevant parts and shop with greater confidence. Our vehicles GMV also continues to scale rapidly, with particularly strong growth among C2C sellers and smaller dealers. In Q2, we launched native vehicle listing in the eBay mobile app, driving a notable increase in C2C inventory. We are also using AI and automation to simplify the transaction process, including verifying title, VIN, and odometer images against verified DMV records and sale documentation with significantly less manual intervention. Alongside broader process improvements, this has helped reduce the average time to vehicle pickup from over 2 weeks to roughly 4 days. By making it easier to list, verify, and complete a secure transaction, we are improving the customer experience and supporting continued momentum in GMV. Fashion also contributed positively to GMV growth, led by luxury and pre-loved inventory. In Q2, we expanded Authenticity Guarantee to cover more than 100 apparel, footwear, and accessory brands across the US and UK, and began testing optional authentication across a broader range of price points to extend trust to more C2C fashion inventory. We also extended Authenticity Guarantee eligibility to jewelry sourced from Greater China. Combined with eBay's breadth of inventory and AI-powered selling tools, these investments are strengthening our position in pre-loved and luxury fashion on the eBay platform. Last week, we completed our acquisition of Depop. I'm excited to officially welcome the Depop team and community to eBay. Depop joins us with incredible momentum and strengthens our leadership positions in C2C and re-commerce while extending our reach with a younger generation of buyers and sellers. It is also highly complementary to eBay's existing fashion business. eBay offers broad global selection across pre-loved and authenticated luxury, while Depop brings a social-forward and discovery-led experience with particular strength in pre-loved fashion inventory at accessible price points. These complementary strengths allow the combined company to serve a broader range of consumers and unlock more of the inventory sitting in closets around the world. As we look at ways to support Depop's outstanding growth, our first priority is to maintain the brand, community, and product experience that make Depop special, while helping the team accelerate its existing roadmap. At the same time, we see clear opportunities to use eBay's scale and capabilities to support Depop's growth, including introducing Depop to relevant customers on eBay to stimulate demand, making shipping more affordable and convenient, and offering our expertise in trust and marketplace safety. We are still in the early days of bringing these complementary businesses together, but believe the strategic fit is compelling. Pairing Depop's differentiated audience and user experience with eBay's scaled global user base and marketplace capabilities allows us to build on our established strengths in fashion, broaden our reach with younger consumers, and unlock more of our total addressable market in C2C and re-commerce. Our acquisition of Depop builds on the strong consumer selling momentum across eBay's core marketplace, as C2C GMV grew by over 20% in Q2, outpacing overall GMV. C2C GMV continued to grow in mix in the US, our largest market for consumer selling, driven by healthy double-digit growth in both sellers and supply. Collectibles, electronics, and fashion were the largest contributors to this continued momentum, while the latest generation of Magical Listing is further accelerating consumer supply by making it dramatically easier to list and sell on eBay. In the UK, C2C GMV trends were particularly strong, supported by broad-based supply growth and continued outperformance in focus categories. Active sellers reached their highest level since 2023, while UK C2C GMV saw its strongest growth in many years outside the pandemic period. In Germany, we're seeing healthy growth in C2C GMV as we intentionally shift investment toward the categories and experiences where eBay has the strongest right to win. That transition may create some near-term pressure on overall GMV and buyers in Germany as we continue to navigate a challenging macro backdrop. But we are seeing encouraging early results from this pivot that suggest it will increase penetration of strategic GMV and strengthen the long-term health of this market. In Australia, we saw an acceleration in C2C GMV growth to double digits, which helped the region overall post its strongest growth in several years during Q2. New and reactivated listers, listing creation rates, and other leading KPIs have notably increased since we launched our Australian C2C initiative in May, providing encouraging early evidence that our enhanced value proposition is resonating with consumers. Taken together, these initiatives are bringing differentiated supply onto eBay by unlocking inventory in consumers' homes and strengthening the sell-to-buy flywheel on eBay. Importantly, our analysis suggests that Depop's success in C2C has been incremental to our own, further validating the significant untapped opportunity in re-commerce globally. Now, let's turn to eBay Live, which posted another record quarter as GMV grew by roughly 8x year over year in Q2, alongside rapid growth in viewers, watch time, and sold items. Based on our growth and available market benchmarks, we believe eBay Live is gaining share across all 7 markets where it operates. In July, we took a major step toward unlocking the next phase of growth for eBay Live as we move beyond our invite-only model and launched self-service onboarding for eligible U.S. sellers across more than 300 categories, with additional markets expected to follow in the coming weeks and months. This creates a direct, scalable on-ramp for live sellers and inventory while maintaining the trust standards that differentiate eBay. From a product perspective, we continue to improve eBay Live for both buyers and sellers. New discovery surfaces across the eBay homepage and mobile app make relevant events easier for buyers to find, while simpler event setup, inventory preparation, and live item management reduce the workload for sellers. We have also improved bidding responsiveness, making events faster and more seamless for participants. Importantly, we're seeing eBay Live's benefits extend beyond each event. Among established sellers who stream regularly, over 90% grow their GMV on eBay, and the median GMV increase for live sellers is roughly 3 times that of similar sellers who do not use Live. And we're seeing similar results on the buyer side. For instance, first-time Live buyers shopping in collectibles are spending approximately 70% more than comparable non-Live buyers, with roughly half of the incremental spend occurring outside of Live events. These results reinforce our confidence that Live can deepen engagement, broaden discovery, and increase velocity across the broader eBay marketplace. Next, I'll discuss how we're leveraging AI to reimagine the buying and selling experiences on an ongoing basis. For sellers, the next generation of our magical listing experience is making selling on eBay dramatically easier by leveraging AI and our product knowledge graph to do most of the hard work on their behalf. We have now fully ramped the latest generation of magical listing to all new and reactivated listers in the UK, Germany, and Australia, and are seeing compelling uplift on key KPIs directionally similar to what we observed in the US. Australia is our first market where we have released the latest magical listing experience to all C2C sellers, an important step toward extending these benefits to our broader seller base. In Q2, we began integrating enhanced pricing guidance into magical listing to help sellers balance velocity and price realization, and we improved the accuracy of package size estimates to help manage shipping costs more efficiently. For buyers, our agentic search pilot reinforced the value of natural language understanding in helping customers uncover more of the products they'll love within eBay's 2.6 billion listings. We are now working to bring more natural language capabilities into core search to deliver greater density of relevant results, while developing more conversational multi-turn experiences in the parts of the shopping journey where they add the most value. These innovations build on eBay's structural advantages: 30 years of commercially relevant data, tens of billions of cumulative listings and product images, and our ability to train and deploy AI models efficiently on our private cloud infrastructure. Shipping services are becoming an increasingly important part of our platform and a meaningful enabler of marketplace velocity. By leveraging our scale and carrier relationships, we can reduce cost and complexity, strengthen trust, and make lower price transactions more economical to further unlock our TAM. In the UK, the majority of C2C transactions go through our managed shipping program, where we continue to expand our pickup and drop-off capabilities. Through our partnerships with InPost and Royal Mail, buyers and sellers can access approximately 50,000 lockers and parcel shops nationwide. With 95% of UK buyers now living within 1 kilometer of a pickup or drop-off location, this network offers a convenient, lower home delivery, particularly for lower ASP inventory. We recently announced that eBay International Shipping will also launch in the UK later this month. Following successful launches of this program in the US and Canada, eligible UK sellers will now have access to over 190 countries with lower shipping costs and a simpler end-to-end experience with customs, returns, and international delivery, all managed by eBay. Before closing, I'd like to share a few highlights on eBay's impact. In May, we published our 2025 Impact Report, which showcased the measurable progress made over the last year, from maintaining 100% renewable energy used across our operations to growing positive economic impact through e-commerce and strengthening community support through programs like eBay for Charity and the eBay Foundation. Through eBay for Charity, buyers and sellers raised $58 million for charities in Q2. This included an auction for a private lunch with Warren Buffett and Steph and Aisha Curry. The winning bid exceeded $9 million, and matching contributions from Mr. Buffett brought the total raise.
Okay, seriously, why does this have to go on their earnings call? Jeez, charity events with Steph Curry.
Stephen Colbert to auction iconic memorabilia from the Ed Sullivan Theater during the show's final season, raising more than $2 million for World Central Kitchen. eBay was also recognized by the Wall Street Journal as one of the best companies for the future, and by the U.S. News and World Report as one of the best companies to work for, reflecting how our culture and commitment to impact support our long-term success. In closing, Q2 was another strong quarter, with broad-based growth across our strategic priorities. Focus categories, C2C, and recommerce each grew more than 20% and now represent more than 70% of our total GMV. Our emerging growth vectors are scaling quickly and becoming more material. eBay Live grew by roughly 8x year over year in Q2. Vehicles GMV is growing rapidly as we improve the end-to-end transaction experience, and shipping is lowering costs and friction across domestic and cross-border transactions. AI is delivering measurable impact across both sides of our marketplace. Magical Listing is streamlining listing creation and bringing more C2C inventory onto eBay, while AI enhancements to search and discovery are helping buyers more easily find the most relevant items across our 2.6 billion listings. The addition of Depop broadens our fashion portfolio and expands our reach with younger consumers, strengthening our position in C2C and recommerce. And finally, we continue to balance investments in long-term growth with disciplined execution. Q2 once again demonstrated our ability to invest behind our strategic priorities while still delivering strong growth in operating income and in EPS. I want to thank our employees for the continued execution and our global community of sellers and buyers for their trust and partnership. With that, I'll turn the call over to Peggy to provide more details on our financial performance and outlook. Peggy, over to you.
Thank you, James.
Geez, that was just the opening statement.
In the second quarter, we exceeded expectation across all of our key financial metrics. GMV grew by 14% to $22.4 billion. Revenue grew 14% to $3.13 billion. Non-GAAP operating income grew 16% year over year to $893 million, and non-GAAP earnings per share grew 17% year over year to $1.60. We also continued our commitment to capital returns, delivering nearly $450 million to shareholders through repurchases and cash dividends. Now let's dive deeper into the numbers. GMV grew 14% to $22.4 billion on an organic FX neutral basis, while inorganic contributions were not material in the quarter. Foreign exchange provided a tailwind of nearly 1 point to spot GMV growth. Our Q2 growth was driven by the sustained and broad-based momentum across our strategic priorities, consistent with last quarter. Focus category GMV grew 26% and outpaced the remainder of our marketplace by 20 percentage points, with collectibles, motors, fashion, and refurbished all contributing. The breadth of this performance reinforces our confidence that our strategy is working, and our momentum is not dependent on any one category. Next, let's look at how our major geographies performed. Our U.S. business delivered another great quarter in Q2, with GMV up 24% as our investments in focus categories, C2C, live, and shipping are paying off. For instance, collectibles growth in Q2 was strong beyond trading cards as coins, comics, and sports memorabilia all grew at a double-digit rate. Both parts and accessories and vehicles contributed to our eBay Motors GMV growth. And our U.S. fashion business also posted double-digit GMV growth, led by luxury-focused categories, including handbags, jewelry, watches, and apparel. International GMV growth improved to 4% year over year in the second quarter on an organic FX neutral basis, with foreign exchange providing a 160 basis point tailwind to spot growth. The investments we are making in focus categories and C2C in our international markets are working, as GMV growth in both areas grew in the double digits in Q2, helping offset the continued weaker macroeconomic conditions in these regions. GMV growth in the UK, Germany, Australia, and Canada also improved sequentially. Moving on to our buyer metrics. Active buyers grew nearly 2% to 136 million on a trailing 12-month basis, including buyers from recently acquired ties. We are seeing particularly strong growth in the U.S., where active buyers increased 6% in Q2. Enthusiast buyers totaled 16 million and grew by nearly 3% year over year, and spend per enthusiast buyer increased to approximately $3,600 on a trailing 12-month basis. In the U.S., our enthusiast buyer growth accelerated to 9% year over year in Q2. Shifting to our income statement. Revenue grew 14% to $3.13 billion on an organic FX neutral basis. Foreign exchange provided a tailwind of approximately 1 point to spot revenue growth. Our Q2 take rate was flat year over year at 14%. Tailwinds from advertising, shipping, and financial services were offset by ongoing category and ASP mix shifts, as well as faster growth in earlier stage businesses like eBay Live. Advertising, shipping, and financial services create value beyond direct monetization. Ads help sellers improve visibility and sales velocity, while shipping and financial services reduce transactional friction, expand choice, and strengthen trust. In Q2, total advertising revenue was $596 million, representing GMV penetration of nearly 2.7%. First-party ads grew 24% to $570 million. Promoted listings comprise nearly 1.3 billion of the 2.6 billion total listings on eBay, and 5.7 million sellers adopted at least one promoted listing product during the quarter. In addition, off-platform ads grew 21%, primarily driven by strong growth in our Q10 business in Japan. We continue to see a long runway for advertising growth, driven by increasing ad relevance, seller adoption, and listing penetration. In Q2, we made it simpler for C2C sellers to promote all of their inventory within our mobile apps. We also rolled out updated relevance models across CPC ads and recommendation surfaces, helping sellers drive more velocity while preserving the buyer experience. Within financial services, we continue to expand buyer choice, reduce friction, and improve the economics of our payment flows. Pay by Bank in the UK is a great example of how a better customer experience can also improve our economics. This payment method is now fully ramped in the UK and is showing encouraging early adoption, with average order value nearly twice the site average alongside lower cost of payments. eBay Balance also continues to gain traction across the US, UK, and Germany, allowing sellers to use their proceeds for purchases on eBay while reducing payment costs. These capabilities are part of a broader wallet strategy designed to deepen our financial relationship with our most engaged customers over time. Additionally, revenue from eBay shipping programs grew double digits in the second quarter. As Jamie noted, we continue to expand our range of domestic and international shipping programs while integrating more lower-cost delivery options within them to improve affordability for buyers and sellers. Turning to our profitability and earnings. Non-GAAP gross margin was 74.1% in Q2, up 1 point year over year. Our non-GAAP operating income grew 16% to $893 million, reflecting healthy flow-through from our GMV outperformance alongside incremental investments within our strategic priority areas. Sales and marketing expense increased in Q2 as we saw opportunities to invest across the funnel with attractive ROI to drive GMV growth, with incremental spending focused on strategic areas like C2C and eBay Live. We continued to see strong efficiency in our lower funnel campaigns, even as we began to lap a notable step up in efficiency in the prior year midway through the quarter. Alongside other operational efficiencies, we also saw a moderation in transaction losses sequentially as a result of our team's work to optimize our newer shipping programs and customer experience, with further progress expected in the second half of the year. Our strong operating performance translated into non-GAAP earnings per share of $1.60, up 17%, and GAAP earnings per share of $1.21. Shifting to our balance sheet and capital allocation. We generated free cash flow of $326 million in Q2 and ended the period with cash and fixed income investments of $4.9 billion and gross debt of $6.7 billion on our balance sheet. Our equity investments and warrants were valued at roughly $780 million. We repurchased $310 million of eBay shares in the second quarter at an average price of approximately $104. The pace of repurchases in Q2 was influenced by share price volatility during the quarter, which impacted our pre-established repurchase programs. We also paid a quarterly cash dividend of $138 million in June, or 31 cents per share. On July 30th, we closed the acquisition of Depop for $1.4 billion in cash, reflecting the purchase price of $1.2 billion and approximately $200 million of net purchase price adjustments. The purchase price adjustments mainly reflected certain investments that Etsy and Depop made prior to the acquisition close. Next, I will share some thoughts on our outlook, starting with the third quarter. Please reference the earnings presentation accompanying our release for our outlook in spot growth terms and foreign exchange implications. We expect consolidated GMV between $22 and $22.4 billion in Q3, including the impact of recently acquired Depop, which represents total FX neutral growth between 10 and 12% year over year, or organic growth between 7 and 9%. Our guidance implies Depop would contribute approximately 2.5 percentage points to total FX neutral GMV growth in a partial quarter. Our consolidated GMV guidance implies continued broad-based growth from the core eBay marketplace as our strategic priorities continue to drive durable growth across multiple categories. The implied year-over-year deceleration from Q2 to Q3 is primarily due to the lapping dynamics we have discussed in recent quarters, which we started to observe in July as expected. In contrast, our outlook contemplates an acceleration in Depop's year-over-year GMV growth versus Q2 on a pro forma basis, driven in part by the effectiveness of recent marketing and shipping investments. We forecast consolidated revenue to be between $3.07 and $3.12 billion in the third quarter, which represents total FX neutral growth between 8 and 10% year over year, or organic growth between approximately 7 and 9%. We expect Depop to contribute approximately 1.5 percentage points to total FX neutral revenue growth, which is lower than its contribution to GMV growth, primarily because a significant portion of our planned shipping investment will be recognized as contra revenue. We have seen strong buyer response to improve shipping affordability, including higher customer acquisition and transaction velocity, particularly at more accessible price points. We believe this investment can unlock a larger addressable market in C2C fashion, and we will continue to calibrate it based on the returns we observe.
Geez, this girl's a little bit hard to listen to. Hopefully she's almost done.
GAAP operating income growth to be between 1 and 5% year over year in Q3, which implies non-GAAP operating margin between 25.1 and 25.6%. This includes an expected 3 to 4 point headwind to non-GAAP operating income growth from Depop. Our outperformance in the first half has created incremental capacity to invest behind strategic priorities where we are seeing strong returns, including C2C, eBay Live, and our shipping roadmap, while continuing to drive healthy flow-through from the core business. We are also investing behind Depop's strong momentum and the significant opportunity we see in C2C and a younger customer demographic. Importantly, a portion of this investment is being funded by allocating existing marketing spend to Depop, which mitigates the incremental pressure on consolidated operating income. We believe we are striking the right balance by investing behind our strongest growth opportunities where we expect attractive returns while continuing to deliver healthy consolidated earnings growth. We forecast consolidated non-GAAP earnings per share between $1.36 and $1.42 in Q3, which implies year-over-year growth between 1 and 5%. This includes an expected mid-single-digit headwind to non-GAAP EPS growth from Depop, with the impact to EPS being modestly higher than operating income due to foregone interest income on the cash used for this transaction. Shifting to our full-year outlook, we are now planning our business around consolidated year-over-year GMV growth between 11.5% and 12.5% on an FX-neutral basis, driven by our established strategic priorities, emerging growth vectors like eBay Live and vehicles, and our acquisition of Depop. This includes an expected contribution of roughly 1.5 percentage points from Depop and assumes its GMV growth will accelerate by double-digit percentage points in the second half of this year versus Q2 on a pro forma basis, reflecting Depop's strong momentum. We expect consolidated full-year revenue growth to be roughly 0.5 point below GMV growth on an FX-neutral basis, or between 11 and 12% year over year, as healthy growth in advertising and shipping revenue is expected to be offset by mix shifts in our business, including higher growth contributions from Live and vehicles and the impact of the Depop acquisition. We expect Depop to contribute roughly 1 percentage point to consolidated revenue growth. We now expect consolidated non-GAAP operating income growth between 10 and 12% year over year in 2026, which contemplates a stronger outlook for operating income growth driven by the core eBay marketplace, while Depop is expected to be roughly 2 percentage point headwind to growth. We expect full-year consolidated non-GAAP earnings per share growth between 10 and 12% year over year, with Depop representing roughly 2.5 percentage points of dilution to our non-GAAP EPS. We anticipate our lower cash balance and higher interest expense would pressure the net interest and other line item year over year, partially offsetting the tailwind from our share repurchases. We continue to expect a non-GAAP tax rate of 17.5% for the full year, which is 1 percentage point higher than our tax rate in 2025. Our capital allocation outlook remains unchanged. We forecast capital expenditures to be between 4 and 5% of revenue for the full year. We continue to target roughly $2 billion of share repurchases for the full year and plan to increase our quarterly repurchase rate from Q2.
Let's go.
And our board declared a quarterly cash dividend of 31 cents per share for the third quarter to be paid in September. In closing, Q2 was another strong quarter that clearly demonstrated the power of our strategy. Broad-based momentum across our strategic priorities delivered outperformance on both the top and bottom lines. We enter the second half of the year in a strong position, with our improved full-year outlook reflecting the momentum we see across focus categories, C2C, and re-commerce. We are confident in our strategy and focused on driving durable, profitable growth for our shareholders. With that, Jamie and I will now take your questions.
Oh, thank you, Lord.
We will now begin Q&A. For today's session, we'll be utilizing the raise hand feature. If you'd like to ask a question, simply click on the raise hand button at the bottom of your screen.
It's like almost like they don't
Once you've
want
been
you to
called
listen
on,
to
please
their-
unmute yourself and begin to ask your question. Please limit to one question and one follow-up before jumping back in the queue. Thank you. We will now pause a moment to assemble the queue.
Come on, Cohen.
Your first question comes from the line of Colin Sebastian with Baird. Please unmute your line and ask your question.
Great. Thank you, and I appreciate the questions. I guess first off, I mean, you talked about higher engagement of eBay Live buyers, and I was hoping you could perhaps explain a little bit more about how this can resonate across the broader platform, how extensible this is to other categories and a larger buyer base. And then secondly, Jamie, on the AI-powered discovery and listing tools, those seem fairly well utilized now across the marketplace. What's the next frontier for AI on eBay, or untapped opportunity, I guess, if it's seller side automation or search and discovery or something else? Thank you very much.
Yeah, thanks for the questions, Colin. So first off, on live buyers, what's exciting to see is the synergies between our core marketplace and on eBay Live. So when we look at buyers that start shopping in Live, they're spending 70% more than comparable buyers that are not shopping on Live. And it's great to see like the engagement that we're getting.
See this fluff in their response? Keeps asking like, hey,
and driving that
how are you going to
engagement.
continue this live growth? And all he does is just talk about fluff.
And it's great to see.
And he's like, hey, your magical listing for AI sucks. Like, what else are you going to do with AI?
The same type of thing on the seller side, where our sellers that are doing live are seeing faster growth because of their participation in live. You know, on magical listings, we're really excited. I mean, now it's been, hundreds of millions of listings that are out there. We've expanded it now across our major geographies across US, UK, and Germany. We just added it to Australia, and we continue to see great reaction from sellers. Faster listing times, stronger repeat behavior, and significantly more sold items in GMV per listing attempter. And that's leading to a measurable uplift on C2C sellers and supply. And, we talked about the success we're seeing in C2C. The next step is to expand that to all C2C sellers, because it's right now just in new and reactivated sellers. And so Australia is the first market where we're doing that. In fact, starting this month, we've expanded that to all C2C sellers, and we'll learn a lot through that market to keep expanding it. Broadly, beyond selling, we continue to, apply our 30 years of data to lots of different areas. AI is being helpful to us in advertising. It's really helping us drive our search experience and our search conversion with what we're doing there. We're using it in our CRM materials to be much more targeted, and we're seeing much more engagement there. So really across the board, we're seeing it. But in terms of magical listings, we've still got a lot more penetration to go to drive to increase the experience and continue to drive our listings growth with it.
Thank you.
Your next question comes from the line of Michael Morton with MoffettNathanson. Please unmute your line and ask your question.
Hey, good afternoon. Thank you for all the context on the planned investments in the C2C business and the Depop acquisition. Big picture, I was wondering what your outlook is for the competitive intensity in this market, I would say in the US, but also internationally. C2C is accelerating, but that's not a secret, and there are several players making aggressive investments in that. And then my second question, maybe just a boring accounting one. For eBay Motors, when you speak to eBay Motors and you talk about it contributing 2% of GMV growth, I just want to make sure that's not including parts and accessories. And if it is just eBay Motors, as in vehicles, can you kind of help us understand that growth rate that's organic, more volume, versus being able to be measured due to the Carmel integration where you can kind of guarantee that the transaction occurred? Thank you.
Yeah, I'll take the first one. So, first on the opportunity there, we see a huge underpenetrated opportunity in C2C fashion in the US market. And the market growth we're seeing really validates the size of that opportunity. We're coming at this from a real position of strength. eBay has a over $10 billion business in fashion, and C2C GMV is growing faster than our overall US business. And now we've added Depop, which brings an established brand, a discovery-led product experience, and a strong reach with younger consumers. And when you look at it, both eBay and Depop delivered very strong growth in Q2, suggesting that Depop's momentum was incremental to ours, and the addressable market is expanding. So we're really focused on using these complementary value propositions to unlock substantially more consumer supply and capture more of the significant untapped market opportunity in C2C and in e-commerce. Peggy, do you want to take the Motors question?
Sure. Thanks for the question, Mike. So for eBay Motors, that includes both parts and accessories and vehicles. The majority of it is parts and accessories, since that's the established piece of it. Vehicles is earlier stage, but becoming a larger contribution to overall Motors and to the company overall. And obviously, the acquisition of Caramel has just really improved the user experience and the ability to list vehicles. And, sort of have an all-in offering, which is helping the growth of the Motors business, vehicles specifically, but also, with parts and accessories being very complementary to the vehicles business.
Appreciate it.
Your next question comes from the line of Ken Gawrelski with Wells Fargo. Please unmute your line
Wells
and
Fargo.
ask your question.
Yes. Sorry about that. I had to unmute. Could we talk a little bit more about Depop and the opportunity there? Could you talk a little bit about ongoing marketing intensity? There's a new market entrant in the US. You've faced this market entrant in Europe, UK, Germany, other European markets. Could you talk about, what you learned from those lessons, what you might apply to what you see here in the US, and talk about using Depop, as a kind of an offensive weapon relative to maybe the tactics you used in the UK and Germany. Thank you.
Yeah, I'll take that. So look, when you look at the US consumer, first, eBay brings a really strong US C2C business. It's one of our strongest area. But when you look at the US market, we believe that the pre-loved closet, if you will, is even underpenetrated relative to other markets. So we see a massive TAM, and that TAM is generally and is broadly incremental to kind of TAM that we've seen on the eBay business before. So when you look at it, fashion, C2C, and e-commerce were already important drivers to eBay's growth before the acquisition. But Depop brings, a fast-growing established brand, community,
So a
It's
couple
cell to
interesting
buy
things like
AI
these guys are
real and a real
asking,
discovery-led
like, hey,
product
you're
experience that also expands their
like
reach with
basically
younger
tell me about
consumers.
your
In
ad
a world of
spend.
limited resources, they
How do I know
decided to
this is
focus
actually a
their
net
efforts
positive for the
on the
company?
U.S. market, and it's been performing very well. If you
There's
look at
also just
the
so much
time of the
performative language in
acquisition,
this,
Ken, they
like
had
in this whole
7
earnings
million
call.
buyers. By the end of
Like there's
Q2, they had
everything is
9
said
million
positively,
buyers.
even if they're
And
actually
we see, the
masquerading negative
opportunity to
comments.
combine that with eBay's
Like
scaled
they said
demand,
how
our
Depop is
trust, our
actually going to be
shipping
a headwind to
capabilities, our
EPS.
marketplace infrastructure,
I
and
don't
that can
like
really help
headwinds
them
to EPS.
capture more of that untapped opportunity. So
They said
we're
that
really excited.
the
Our
live
analysis
internationally,
suggests that
they
C2C
think it's
secondhand
growing
fashion
market
only
share. They
has,
think they
low
said we
single digit
believe eBay
online
Live is
penetration
gaining market
today,
share. They
compared
don't
to
even know
significantly
if they're
higher
even
in
gaining
Europe.
market
And
share.
so we're excited to kind of go after
Even
that
after
TAM
their
and really
8x
leverage the
growth, it's like
investments.
they
Mary,
might
do you
not
want
even
to
be
talk
gaining
more about
share.
how we're thinking about the marketing side?
Yeah, the investments that we're
They
making are
also talked about
primarily
how
within full funnel
they're
marketing with
developing
shipping
shipping
affordability.
and how that's a
It's
revenue
important to
driver
note
for
that some
them.
of our planned
But they
investments in
said there's
Depop are being funded
expenses
by
related to that growth and that
employing
shipping
existing
development will
eBay C2C
create,
and fashion marketing
quote,
dollars.
contra
It
revenue.
doesn't translate incrementally to expenses
Like, why
overall
add such
for
flowery
eBay.
language? Like, it's
The
called an
shipping investments are
expense
coming in the
or
way
it's a
of tiered
loss,
buyer
you
fees
know?
and
Like,
incentives that
oh,
reduce the all-in cost
here's
to
our revenue and
purchase,
here's our
which is
contra
particularly
revenue,
important
you
for
know?
lower
Like,
ASP fashion, where shipping can represent a
not
meaningful
everything in this
portion of
call is
the total
bullish about
price.
eBay,
So by increasing the affordability
but everything
at a
they
broader
say is
range
so
of price
promotional.
points, we're seeing increased conversion, more customer acquisition, converting those buyers into enthusiasts. And so we're
I
really seeing
understand,
that the
Aggie, that
ROI of that
it's
investment
a offsetting
is worth
revenue,
the investment. And
but
overall, we were able
the
to
way they
do this
describe
while
it
within a
is
very healthy
it's
financial
as if
architecture
they're
overall.
telling you happy birthday.
Could I ask one follow-up, please, if you don't mind?
Like they're saying it,
Just
the tone they
as
say
you
these
think
things is
about
as if it's good news.
the tactics
And it's like, oh, it's
employed in
net
this
contra
area,
revenue. Like that's not actually,
ultimately
the
ends up
reality is
being
not matching
advantageous from a
your
seller
tone.
to a buyer fee in the UK, and then a complete reduction in the fee, I think, or elimination in the fee in Germany. What's your level of confidence that that the tactics you're employing now will be effective more effective in the U.S.? I completely appreciate what you're saying, and that you have a much stronger platform here to fight with.
It's very
Could you
different than Ryan
please
Cohen.
just touch on those points for us, please?
Yeah, as it relates to the U.S., we have no current plans to change, the fees as it relates to eBay. Depop already has a buyer fee model, which is, complementary to kind of that
No plans to
discovery-led
change
type of
eBay's fee.
experience. And so that's kind
They're
of
going to
built
keep it
into
just as
that
high as it's
licensing change.
always
They
been.
made that change quite some time ago. And so overall, we feel like we're in a very strong competitive position. When you look at the combination of the scale and the capabilities that we've built, the strength that we have in our eBay fashion business, combined with this high growth, well-established brand that really appeals to younger consumers, we feel very, very strong. I had a huge group of interns here this summer, and, I went around and said, how many of you use Depop? And almost every hand went up. And they talked about how much they love the experience, the high customer satisfaction, the sell to buy flywheel. And I think that's why it's such a strong and growing brand. And I'm excited. I mean, it's only a couple days into the acquisition, but I'm really excited to kind of be able to unlock more and more of the synergies that we've talked about to this real hyper growth asset that's now part of eBay.
Thank you so much.
Your next question comes from the line of Ross Sandler with Barclays. Please unmute your line and ask your question.
Thanks, guys. Maybe shifting gears to core eBay X Depop. So we're about to lap some of the kind of non-durable items that you guys have talked about in the past. Yet the 3Q and the implied kind of 4Q GMV looks like it's just shy of 10% kind of organic. So just curious for an update on some of those lapping dynamics. It seems like we're broadening out a bit across these focus categories, and so maybe some of that non-durable is becoming more durable. Just curious to hear what's going on with the consumer and your increased confidence in this growth rate in back half. Thanks a lot.
Peggy, you want to take that one?
Yeah, sure. So first,
So he's talking about like lapping like the revenue
some of the
from
dynamics in
collectibles
Q3, we'll be
spiked
lapping a
for
full
eBay
quarter of
last
last year's
Q3 and
benefit from the
Q4.
launch of our
So he's saying
US
like, hey, you're
Salon
about to be
partnership, as
using
opposed to
those
only a
as your
partial quarter
year-over-year
in
comps.
Q2.
You know, just like
We also will continue to
GameStop in
lap last year's
Q2,
marketing
they're going to be
efficiency gains
comped against the
from a
launch
favorable
of
competitive
Switch 2.
environment.
That creates a hard
And
comp
then
to
for the
show
core
year-over-year
marketplace,
growth
excluding
on.
Depop, we believe that
At
a
the time,
year
eBay
over
said that
two-year
this
comparison
spike in collectibles was
provides a
short
clearer
term and
view.
not
You can really see
sustainable,
the
but right
lapping
now they're
dynamics
looking like
that
they actually
way.
will be
And on
higher
that
in their
basis,
Q3
our
and
outlook
Q4
implies a Q3 GMV growth
than
that's
they
still
were
quite
in Q3 or
healthy.
Q4 last
When we
year.
think about the second half
So he's
in
basically
total,
asking like,
so
so
the whole
is it
second half of the year,
sustainable? Like, is it going to keep
beyond the
growing like
lapping
this?
dynamics, we expect,
Or how are you
and this
growing
is
if
baked in, a
the spike
deceleration in
is
Pokemon
not
growth as
actually a
we
spike
lap
and you're
last
actually
year's
higher than you've
triple-digit
been?
growth with tougher year-over-year comparisons in the second half. And then beginning in Q4, we'll start to lap the strength in the bullion demand, which we flagged in late 25 and early 26. So outside of that, we believe that the majority of our growth is durable, and we remain very confident about the underlying strength of our business, which is what drove us to raise our full year outlook. And, you know, in that, we've considered a variety of scenarios as it relates to the macro and economic environment. We're not expecting any significant change that we've baked in, and all of that is included in our confidence in raising the full year.
Your next question comes from the line of Deepak Mathivanan with Cantor Fitzgerald. Please unmute your line and ask your question.
Right. Thanks for taking the questions. Jamie, can I ask about eBay Live? Basically, we've seen growth, approximately 7 to 8x year on year over the last few quarters. Any incremental color you can provide on penetration in terms of seller or buyer participation? How are you, now increasingly using AI to make merchandising live easier? And then second question, maybe for Peggy on marketing reallocation from core to Bebop. Are there certain pockets that are discretionary in core that you think can be reallocated to Bebop, over the next few quarters? Any additional insights you can provide on what those dollars would be? Thanks so much.
Yeah, look, I think we're really excited because
Is your
eBay
live
Live
going to
is
keep
growing,
growing
as
this
you said,
fast?
7-8x year over
And are you going
year.
to cut down on
And to
marketing?
date, it's kind of been more of a
Will
invite-only
you
general
synergize marketing
program. And
expense
starting
with Depop's marketing
just this past
expense?
month, we actually moved it to a self-service type of thing. So we're going to keep kind of the same high trust bar that we have on the platform, but making it easier for sellers to come into the platform and onboard there. And we see that, as I talked about up front, it's really strengthening sellers' businesses when they come on. So sellers who stream regularly see more visits than comparable sellers. And so it's really driving that. You've also seen us doing a lot more demand scaling, whether that's, the paid social things that we're doing, working with our sellers, increasing the prominence of live on the overall kind of website and app. When you look at it, we're actually taking share in all 7 markets. We just had this great activation at the National, which is the largest collectibles trade show. And, we were there with Logan Paul and Ken Golden, hosting lives, et cetera. Ron Gronkowski did one. And we're really kind of happy with the growth that we're seeing, but I'm also really excited for these new demand drivers and opening up sellers kind of more broadly on the marketplace. Peggy, do you want to take the second one?
Sure. One of the things that we've been focused on for a while now is really a discipline around OpEx and efficiency, with a focus on delivering sustainable growth in operating income and earnings per
That's
share.
such bull.
We've been
We've been
executing on a
focused on
strategy
operating
where we're really
efficiency.
focused on balancing investment in GMV and revenue growth,
Whatever.
while also improving operating margin and return to
That's just
capital
great.
in order to get that mix right. And so when we think about Depop, we feel like over time, eBay's scale, marketing expertise, carrier relationships, shipping technology are all areas that are going to help us convert today's growth investment into a structurally better unit economic model. And, that's what gave us the confidence to say that Depop is going to become accretive to consolidated non-GAAP operating income in 2028. And so what's great about the way we're investing is
2028.
that there's a lot of synergies between eBay and
Depop's
Depop.
not going to
And
be
so that
accretive
enables
until
us to really focus our
2028.
investment in areas that are going to allow us to capture a growing TAM in the fashion C2C business. And so that's where we're able to continue to get efficiency to invest in the top line.
Your next question comes from the line of Tom Champion with Piper. Please unmute your line and ask your question.
Hi, good afternoon, everyone. Jamie, maybe to begin with you, it's been quite a journey in GMV growth from post-COVID to now. And I'm just curious if you could take a step back and frame for us what you think the GMV growth opportunity is, maybe on a longer term basis. Is there a back of the envelope or heuristic that you go back to? And then maybe, Peggy, for you, I'm just curious if you could talk about active buyer growth and the prospects for that relative to the 2% we've seen the last couple quarters. I think you referenced some stronger enthusiast buyer growth recently. Any comments on that would be really helpful. Thank you.
Yeah, thanks for the questions, Tom.
Basically, your business has been kind of static for 4 years. Are you actually going to grow?
It's really kind of
Or are you pretty
broad-based
much
across
just
the
stuck at
board,
your
which
current
speaks to kind of
size?
the durability. I'd say specifically to your question, if you look at the 2-year stack for the second half of the year, it's a good indicator of the durable underlying strength of our marketplace, which I think, compares very well to benchmarks. The other thing I'd say is that, we are taking share in focus categories in C2C and in eBay Live. And every quarter, our strategic priorities are growing in mix. So these tailwinds are influencing more of our total marketplace growth. And, it's great to see now that 70% of our GMV is driven in these strategic areas of the business. And we're seeing that, over 20% growth in our focus categories and in recommerce and C2C, which makes me feel great about the durability of the growth that you're seeing in the business. Peggy, do you want to take the buyer question?
Sure. Yeah, we were very encouraged to see global active buyers grow 2% year over year to 136 million in Q2. In addition, enthusiast buyers grew by nearly 3% year over year, with average spend per enthusiast buyer also growing to $3,600. We've seen that buyer trends in the US have been even stronger. We've seen growth in active buyers at plus 6% year over year. And in the US, enthusiast buyers up 9%. And we're seeing strength across buyer counts, cohort mix, engagement, spend trends. And so what's been nice also is that, we talked about the synergies of the Depop business. Depop had approximately 7 million buyers on a trailing 12-month basis when we announced the acquisition, and had close to 9 million active buyers in Q2. And we feel that these are very additive to the active buyer base. And so we're excited to include them in our buyer count starting in Q3.
Thank you.
Your next question comes from the line of Michael McGovern with Bank of America. Please unmute your line and ask your question.
Great, thank you. I just wanted to ask about the advertising penetration. I saw it ticked up to 2.7% in the quarter, still seeing really strong growth. But as we get closer to that 3% target, is there a time frame for when we might see ad growth converge a little bit with GMV growth? And is that 3% a ceiling, or can you continue to push beyond that? Thank you.
Yeah, thanks for the question, Mike.
Basically, the only way that you're growing your revenue is by spending more on marketing, and the return on that marketing investment is going to decline, and you're almost at that maximum already.
CPA, CPC, and offsite ads.
By the way,
as you said,
their answer to the last question was a total dodge as far as being able to grow active buyer base.
And that we continue to believe that our advertising revenue will outpace the growth of the business, the growth of GMV. And we continue to have multiple levers, including seller adoption, listings penetration, ad rate optimization, as well as scaling new products. And, we've been bringing AI technologies in, both on the ability to improve the yield that our sellers are getting on the ad placements, but also to just improve the overall experience from the seller side, to leverage AI for recommendations, for campaign building, for suggestions on their dashboard, and that's performing well. So we continue to believe we have a nice long runway for advertising growth.
Operator, can we do one more question, please?
Come on.
Go for it.
Come on.
We want to take one more question, operator.
Hello?
Your next question comes from the line of Nikhil Devnani with Bernstein. Please unmute your line and ask your question.
Great. Thanks for squeezing me in. I wanted to ask a couple. First, just on the GMV strength, is it possible to deconstruct the contribution from order volume strength versus ASP dynamics? And then secondly, maybe one for Peggy. If you just put aside Depop and we think about core eBay, have you pulled forward or accelerated various investment efforts over the past year against the stronger top line you've had? I'm just trying to put your overall EBIT algo into broader context of your investment mandates. Thank you.
Yeah, I'll take the first one. So, when I look at the GMV growth, it's really balanced.
These are
which is great
actually,
to see. It's
I
balanced
know they're
across
not talking about
buyers,
GameStop, but these are actually
frequency,
pretty
sold
pointed
items,
questions coming
and
from the
ASP.
analysts.
And those ASP changes are really about mix.
Like they're
It's great
saying,
to
hey,
think
you
about,
had,
some of our
are you
focus
pulling
categories
forward
growing
revenue?
faster
And
on the platform
is
overall.
that in alignment
And
with
so,
your
what
mandates,
I would
right?
just highlight
Your
is that,
fiduciary
the
duty to
growth
the
is
company. Are
super
you
durable across the board when you look at focus
artificially
categories, C2C,
inflating your
re-commerce,
GMV and
and across
revenue
the different
growth
elements that make up
by
GMV,
pulling forward
which give us a
spending
lot
and
of conviction about the durability. Peggy, do you
saturation
want to take the
that
second one?
should have
Yes,
paced
yes.
over time?
We
In other words,
have
this isn't
taken the
sustainable.
opportunity for the last several quarters that when we outperform on the top line, which we have been, that we reinvest a portion of that so that we can continue to drive durable GMV growth ahead. And you see that in the results. And so we did that in the first half. We also plan to reinvest more of our top line performance in high return opportunities in the second half, which will also include investing in Depop, as we talked about. But we're always focused on making sure that we're balancing, being able to invest in the top line long-term growth and having healthy flow through to the bottom line, which we'll continue to be focused on in the second half.
Yeah, if I take a step back, Nikhil, the strong growth we're seeing now across the board is really the results of, investments that we've made years ago. We invested in our focus categories. We built out these authentication capabilities, and they're now growing 26% on the site. A year ago, we bought Caramel and invested in vehicles and talked about the, run rate of hundreds of millions of dollars last quarter that we're seeing there. And so what we feel great about is we're able to drive this growth and this investment and still, return a really healthy financial architecture, raising our full year guide to have OI and EPS in the double-digit range, I think speaks to the power of our platform and our ability to invest in that long-term growth. So it's a formula that's been working for us, and we're gonna continue to move forward.
Thank you. Appreciate it.
Thank you.
So crazy.
Thank you for joining. This concludes today's call. You may now disconnect.
Y'all notice how in that last question, right, they're asking, hey, you seem that it seems like you're pulling forward some of this revenue growth through increased spending, whether it's purchasing Depop or increasing marketing spend. It doesn't seem like you're going to be able to continue to do that. And I'm not sure if you doing that is even consistent with your obligation to the company. He answers, then he passes that to, I think her name was Jamie, Peggy, sorry, Peggy. And then, oh, Jamie's the other guy. And then Jamie comes back in and answers it again on top of Peggy's answer. Classic uh, sign of defensiveness, particularly when you're already more than an hour into your earnings call and 8K, for an analyst to say, hey, it doesn't seem like what you're doing is necessarily in the long-term best financial interest of eBay. And they're like, well, actually, let me just talk about all these great decisions we've made for very many years. And actually, everything that's going good now is all because of how we are doing so good. You know, Thankfully, the lack of conversation about GameStop is really not in any way a bottleneck to GameStop's acquisition bid for eBay. It doesn't make it more or less likely. Um, but the fact that they didn't mention it, if I'm speculating that some conversation has potentially gone on under the table between eBay and GameStop, I think maybe a second offer has been extended to eBay directly that maybe they have responded about. If that's the case, then they definitely would not talk about it during this call. So, if anything, I am a little bit happy that they didn't discuss GameStop because it leaves the potential open for what if they're legally not allowed to discuss GameStop right now. Whereas if they have refused to take any conversation with GameStop still, then they would have the opportunity to publicly illustrate the reasons why they think that what they're doing is better, why they reject, Cohen this or that. It's possible the reason they didn't discuss GameStop is because they can't discuss GameStop because under the table they already have begun acquisition conversations with GameStop. They also, some of the questions were like, "Hey, what's next?" You're already kind of almost saturated on the marketing front. Your AI within Magical Listings has basically already done what it's going to do. How are you going to meaningfully grow from here? And again, they just kind of doubled down and talked about the things that they're already doing. Plus, hey, Depop, just kind of throw that on top. There's a couple more million buyers, right? Some of that will probably cannibalize our own buyers, but whatever. They again avoided any of the conversations around the synergies that could happen if they do end up merging or accepting an acquisition with GameStop. And analysts are kind of wondering, hey, it seems like you're ready for your next leg of growth. And rather than kind of discussing those possibilities, they just steer the conversation towards the things that they're already doing. So to me, mostly the Q&A, mostly a nothing burger, but we do get, that's what an entrenched management team sounds like. Some of you guys in the comments are like, is this how earnings calls normally go? Like that. Geez, it's so long, so repetitive. It's almost like they don't want you to listen to it. It's just crazy. There's no information here. We're just going to make sure we don't say the wrong answer, right? Here's all our very flowery language, avoiding the real meat of the conversations of what you are asking about. It's very corporate politics-ish, very just honestly like kind of physically painful to listen to for that long. So hats off to you guys for being here and going through it. But the most important things we saw in our evaluation of the 8K in the first half of this video and those conversations that we had. So if you skipped to the live stream, maybe skip back. If you skip to the earnings call, maybe skip back and listen to the front half of this video. I think that was probably more valuable than the call itself. But in the call itself, again, you do hear some of the analysts' concerns about the sustainability of the way that eBay's leading the company and the reality that they have just been spending their way towards top line growth, whether it's GMV or revenue or acquisition of Depop, and that they can't spin their way to do that forever because their balance sheet doesn't have enough capacity to do that forever. But also, the return on investment on those marketing dollars is going to decline potentially like right now. Like it might not continue. That to me is music to my ears. Fundamentally, a very valuable asset, a very valuable business that at the same time dodges some of the most important questions related to optimizing the utilization of that business. So, to me, if I'm an eBay investor, I'm very much still interested in Cohen taking the helm. And if I'm an eBay seller, I'm still very much interested in Cohen taking the helm because one thing that eBay does clearly communicate in this call is we are not going to lower the seller fee, right? We like how much we make from sellers, and we don't think that lowering the fee is going to move the needle enough on our marketplace liquidity. We're just going to keep doing what we're doing. Let me share why everything we're doing is perfect. Nothing we've done has been wrong. We're just going to keep doing it. That's pretty much this earnings call in a nutshell. So could have saved ourselves an hour of our life, but that's that. If you appreciate this going live for eBay, hey, drop a sub if you haven't already. Maybe like it, drop a comment, etc. Thank you, of course, those who support the channel as fans and friends. I do want to clarify again, I've said it before, but there is some member only content as a perk for fans. It is not GameStop fundamental analysis. There's not paywalled budget for life content that you're missing out on. It's just fun, personal, Jeremy, whatever's, it's not like a secret society. So I want to say thanks to those who support the channel and all of you guys support in different ways. So thanks. Thanks. All right. That's all I got for you today. Oh, Active Rehab says, oh, why? Oh, he's talking to Ben. Okay, okay. That's all I got for you today. I will see you in the next one. Cheers.